Hi, my name's Nikki. I'm a sophomore at Kent State University, and I'm studying accounting.
Hi, my name's Anthony. I'm a junior at Kent State University, and I'm also studying accounting.
Hello, my name is Sterling Morris. I am a sophomore as well at Kent State University studying a double major in finance and accounting. And we are here today conducting an analysis on the company Amazon. Utilizing the financial statements, we're going to be determining how exactly Amazon has been performing over the course of 2010 to 2011. Now, Amazon was incorporated in 1994, particularly to sell books. Now, in 2011, Amazon reported that it currently seeks to be Earth's most customer-centric company for 4 primary customer sets, and that includes customers, sellers, enterprises, and also content creators. Now, in addition to that, they generate income by marketing promotional services as well as online advertising and co-branded credit card agreements. While competing with its competitors, Amazon adapts the strategy of providing their customers with low cost, low prices, as well as convenience.
One item to increase off the company's consolidated statement of operations, what would that be?
If I had to pick one item, I think I would pick net income. Net income because the definition is revenue minus expenses. I would want to look at that as an investor because I would want to see whether the net income over the years increases or decreases. In this case, what we're looking right here, it actually decreases from 2010 to 2011. That is actually bad news because we don't want that because we want the profits to go up. So when investors look at that, they're like, oh, they're a profitable company. You know, see what I'm saying?
Exactly. But as we look at Amazon's largest expense, the largest expense is the cost of goods. As you see, Amazon made more money from 2010 to 2011, but their net income still decreased. This means that their expenses increased also. This means Amazon is expanding their operation. They're building more warehouses. They're getting their product more known, more advertisement. And also, Amazon covers the cost for shipping their products. They cover costs for, basically they pay everything before it goes to the customer. So if the expenses is going higher and the net income decreases, it's not necessarily a bad thing. We'll really find out if it's a good thing when 2012's consolidated sheet comes out.
Oh, I understand now because they're growing and they're making themselves bigger as a company. Yeah, that makes sense.
Progress.
Looking at Amazon's consolidated statements of operations, what do you feel the largest expense is?
Well, the largest expense is the cost of sales. Amazon covers, this is where you can see the largest expense, and it's been their largest expense for the last 2 years.
Yes, definitely.
So that basically comes from, like I referenced earlier in the first question, they cover a lot of the costs before the item arrives at the consumer. And they also have the purchasing power of consumers. This means that Amazon offers a lot of discounts to their customers. Amazon pays for this out of pocket. All the discounts that you receive on Amazon.com, Amazon pays for that. It brings in more sales, but at the same time, it's causing them more expenses. This is why, again, in the operation statement, you see the sales going up, but the expenses going up as well. So, as you...
I hear you're invested in Amazon.com.
Actually, yes, I am. I've been invested in Amazon for approximately 10 years now or so.
Ooh, 10 years?
Yes.
That's a long time.
Yeah, so if you have any questions, I could definitely help you.
Yes, we definitely have some questions for you. In 2011, about how many total resources do they have?
Well, when we're talking about resources, we're actually talking about the amount of assets that the company has. So when we're doing or looking for that, we want to look at the company's balance sheet. So if you look on my computer here, I have actually the annual report that shows the balance sheet for 2011, and we can see that the assets for the company actually totaled $25,278,000.
Wow, that's a lot.
It's very impressive. So.
I actually have another question.
Okay, that's fine.
Liabilities. How much did the company owe?
Well, that's something that we can also find on the balance sheet, and it's under the liability section, which talks about anything the company owes as far as anything that they've bought of that sort. So when we look at the balance sheet as well, again, you can see that there's about $17,521,000 in liabilities for the company.
Yes, and that's in current liabilities and long-term liabilities combined.
Yes, correct.
Okay. And lastly, I want to ask you about how much did the stockholders actually owe in 2011?
Stockholders actually owed, which you can find actually at the end of the statement. They actually own about $7,757,000 worth of the company. So it's fairly good. Yeah.
And also, using the accounting equation, how would you set that up?
Well, the accounting equation, as you know, is assets equals liabilities plus owner's equity. So in this case, stockholders' equity.
Yes.
And with the numbers that I just provided for you, you can see that the assets will equal the liabilities plus the stockholders' equity perfectly. And that's what we're looking for, especially in a company that we feel should be reliable, good financial statements. That's why I invest in Amazon.
Yes. That's great.
So Anthony, I hear you're interested in doing a little investing, and I'm an investor of Amazon myself, so I was wondering, where exactly would you look to find how much cash Amazon had at the beginning of this term?
Well, I would look in the consolidated statement of cash flows.
Okay.
Because it shows how much cash the company is bringing in throughout the year, and it shows where they start and where they end in cash.
Okay, so how much did Amazon have at the beginning of 2011?
At the beginning of 2011, Amazon had $3,777,000 in cash.
Wow, that's great. All right, I'll check it a little bit more. How much do you think they had at the end?
Well,
where would you find that as well?
If you would look at the end of the period, right down at the end of the cash balance sheet, it would show you that Amazon made $5,269,000, and they increased their cash flows, which means they sold more items. So,
great analysis. Good steps to being a great investor. I do hope you invest in Amazon.
It sounds like a good idea.
Wow, Sterling. Oh my gosh, I really just have to ask you, where did you get your tie?
Well, my tie actually came from Amazon.
Wow.
Yes, Amazon.
That's what top of Amazon. I got this North Face book back in Amazon
Really?
too.
Oh my
Wow.
gosh.
Where'd you get your scarf?
Oh, got it from Amazon.
Amazon?
Yes.
Wow, man.
Wow, you guys.
Wow.
I think we all should invest in Amazon.
Maybe we should. Actually, yeah. Let's invest in Amazon.
Let's invest in Amazon.
Amazon.
Amazon.